I'm David Wells from ProSec Partners, here to happily introduce Mike Novogratz from Galaxy Digital and Carlton English from Barron's. This is our next Fireside chat. Hope you very much enjoy it.
Hello, how are you doing?
I'm well.
So I gotta say, Mike, I was expecting you to have, a brighter jacket. I kind of wanted to go for a muted color to let you shine. Are you not feeling happy about crypto right now? What's going on?
I was trying to match the outfit with this off purple. Yeah, listen, I was gonna title a speech if I gave one. I'm a complete optimist, but it's time for sobriety in all assets, right? We've gone from a world where 18 months ago, people believed in modern monetary theory. The response to COVID was, double engine, monetary stimulus like we'd never seen and fiscal stimulus like we'd never seen, working hand in hand. And now we've got inflation, and there's no fiscal stimulus coming, and there's no monetary stimulus coming. We have a pretty levered economy, and we had an asset bubble. And so, buy the dip, BTFD was a great meme over the last, long period in the market. And I don't think that's the right meme anymore. It's probably sell the rally. And that doesn't mean every asset's going to go down and that, you should bail out of your crypto and bail on everything. It means that things that were way overvalued are going to come down, that the overall markets probably have a much more challenging 22 than they did 21. That the average rich guy is probably less rich at the end of 22 than he was at the end of 21. And so navigating through that is challenging, right? Bear markets are brutal. You saw a 7% rally, high to low yesterday. And so if you were short futures against your stock, or if you had hedges on against your portfolio and you didn't take them off, you felt stupid. And maybe you took them off at the end of the day and they rolled right back over. And so we have a whole generation of investors that haven't really lived through bear markets. Lots of the young kids that got really engaged with stimulus money in Robinhood trading or in crypto haven't been through markets where buying the dip doesn't always bail you out. And so asset selection can be much more important, right? This will be the year of alpha, not the year of beta. And so it's certainly more sober than I've been.
Are there areas of safety or relative safety, I guess
Sure.
is the question?
In stocks, of course, things with cash flow, right? If you think about it, we were going from a growth equity world to a credit world there. And so banks, things with cash flow, things that, because the economy's fine. Economy's booming. And while it's going to slow some, right, we're having a huge wealth effect. I don't think people have noticed it, but since the beginning of the year, or since maybe the peak in, call it November, the US alone has probably lost $8 or $9 trillion of wealth. And the Fed used to kind of say 15 basis points per trillion. That's like 1.5% of growth on a future look, the way the Fed would think about it. And so even a city like Miami, which had a lot of young crypto wealth, a lot of young wealth, I bet you in 2 months, tables at Live are going to be cheaper, right? And so there'll be a sobriety that happens, and maybe that slows the Fed down. And so, but I think it's a sell the rally. The thing about bear markets, which are funny, is the carnage happens really fast, and then you go sideways, right? We've already had a 50% sell-off in crypto, and so I'm less worried about crypto than I am worried about equities right now. You had to be worried about crypto, 8 weeks ago before it sold off 50%. It's coming to levels where if you're a long-term buyer, you're supposed to be starting to buy Bitcoin, right? I think Bitcoin is probably a 30,000, 50,000 range for the foreseeable future until there's more clarity about the monetary policy and the future path of inflation.
Are you buying cryptos now?
I am buying some and I'm selling others. I'm hedging our portfolio appropriately with equities when I can. And so, listen, in times when you have this kind of dislocation, a risk manager's job is to simplify and shrink. And so, on the flip side, we're building a business that's got a very long horizon on it. We've gone from 80 employees probably 18 months ago to over 500. And we're not slowing that down. The adoption we see in the crypto space is breathtaking. I was at Time Magazine on Thursday of last week, which always seems like 2 weeks ago, and was shocked at how intelligent and deep the Time media team was into the NFT space and really understanding how NFTs are going to change the media landscape. Big commitment. You have the same conversation if you go to Visa. You're talking about how they're looking at digital assets. Almost every company now is accelerating their adoption of things that are built in and around blockchains. And so I have absolutely no less bullishness about the adoption trend of our industry. We're down here. I think my team has 75 meetings set up with you guys. And lots of people in the institutional aren't in yet. And so the big state pension funds are starting to come in. And quite frankly, crypto is not one bet, it's multiple bets. It's Bitcoin as a digital gold. Well, that is going to continue to be adopted by people. And so, like I said, it's had its move from 70,000 to 35,000, 50% retracement. You're going to start seeing buyers and people that haven't had it before hear it a little bit lower. Ethereum, which is a proxy for what I'll call Web3, the Internet of Value Exchange, is really a tech play. And so when I think about Ethereum and Luna and Solana and all these blockchains where things will be built on top of, where payments will be built on top, where NFT businesses, intellectual property will be built on top, where decentralized finance will be built on top, I'm sure adoption is going to keep going because I see it. It's amazing the scale of innovation. It's almost impossible to keep up with. What has to happen is, again, figuring out what the value should be. And think about Tesla for a second. We all know Tesla is an awesome company. If you've ever driven a Tesla car, it's fun. I actually own two, and I drive them all the time.
At the same time?
At the same time, Elon Musk, we know he's a great CEO. Is Tesla should it be worth $900 billion, $600 billion, a trillion? Like, valuation is really hard at a time when a paradigm is changing, right? Valuation is a confidence game. It's a momentum game. And so the charts are telling us that it's time to take a pause on just trees grow to the sky forever.
So there's like 20 different questions I have for you, but one, okay, I've heard you talk about how the crypto boom, it's kind of this kind of anti-establishment revolution type thing. But then there's also this push to have more legitimacy, to have the institutional adoption. Can you have both?
Yeah, but there's a tension, right? I used to kid about wearing a hoodie one day and a suit the next at my office. Listen, crypto came from a generation that said, we don't trust the center, right? And there was good reason not to trust the center. In 2008, we had a financial crisis where people really worried that some of the major financial institutions were going bankrupt. And then they kind of got bailed out, which felt unfair to a lot of people. And so it was a revolution against the center. And if you think about it for a second, put yourself in the shoes of my 19-year-old, a right in the middle Gen Z guy. He looks at the group that's been in charge, right? The 65 to 85-year-olds, right? George Bush, Donald Trump, Bill Clinton, all born the same year, right? This group of baby boomers or little baby boomer plus that have had 30 years in power. And you think about what they've done to America. We went from 40% of debt to GDP to 130% of debt GDP. So they kind of bankrupted the next generation. Thanks, Grandpa. Americans have gotten obese. I was just saying out there, the average American woman has gone from 135 pounds to 170 pounds over that time. Average French woman only gained 3 pounds. So it's not a global thing, it was an American thing. Men just as bad, right? And so we've gotten obese on their watch. Our planet has gotten less stable environmentally, and the inequality gap has widened to a level. And so that generation is saying, why should you guys still be in charge? You know, have you no humility? And that energy shows up in them wanting to create their own system. And so, you know, why this wild passion of NFTs and, you know, DeFi and diving into crypto? Some of it's a reaction against them saying, hey, that world you guys built, we don't really understand as well. Now, there's also a reality of for crypto to really fulfill its destiny, you know, for it to be progressive, so for DeFi to make transactions, peer-to-peer transactions, so much more frictionless. Right now, $8 billion last year spent on overdrafts at checking accounts, $8 billion, all coming from poor people. That should be zero, right? It reminds me of the cell phone, or the telephone. When I used to call my friend, if they were like in the next state over, my parents would almost shoot me because that long distance, you know. God forbid you'd call Europe at $3 a minute. You'd be restricted for a month. And now it's all free. Like payments should go that way. Financial transactions should go that way. And I think they will. And so for crypto to fulfill its destiny, it needs institutional buy-in. And you're starting to get that. You're seeing it all over. And I think regulators are getting it slowly. Politicians, interestingly enough, are getting it quicker. And they started from zero about 3 months ago. And now they realize, hey, there are 50 million Americans, 60 million Americans that own crypto, a lot of them single issue voters. And the right is pushing for crypto as a libertarian thing, privacy. The left hasn't yet, but they really should because it's a progressive thing, if you ask me. And I think it'll be really interesting to watch in the next year how, even in this election, does crypto have an impact?
How do you define crypto as being a progressive thing? I mean, the libertarian aspect you can certainly understand, but what's the progressive aspect?
You're cutting out the businessman. You're cutting out the middleman, right? And so there's middlemen everywhere. There's middlemen in the record business. There's middlemen in the banking business. And crypto is trying to cut them out. Think about the cool thing about NFTs for a second. In the old days, let's say you're a struggling artist. How do you sell your stuff? You got to get a gallery, and you're going to galleries taking money, and they're taking big parts of your profits. And now, all of a sudden, you could be an artist, and you can convince maybe 1,000 people around the world to like your stuff. You know, kindred spirits. And you could actually make a living with a community of 1,000 people that are supporting your stuff. You're cutting out a lot of pieces in between.
And it's all direct to you. Just curious, when you first got interested in crypto, did you see what was going to be happening with NFTs and digital assets? Like, what surprised you about the evolution over the last?
So I talked a lot about NFTs way back in 2014 in concept. I had no idea we would see what we saw, like CryptoPunks, and that this idea of memes and identities would create value. Or you could literally value a social network, and people will pay to be part of that network. I was thinking more of art, right? Like, so what you see in generative art is art made with computer code. And so I originally thought, well, because the blockchain can give us digital scarcity and digital certainty around that, artists might have the confidence to use digital paintbrushes instead of copper and paint and clay and the stuff they've always used to make art. I never really saw it as clear as I should have, which is clear now, which is NFTs are a way to connect community. And that's what it is, right? And so I can connect a community of people that like digital art. I can like a community of people that like CryptoPunks, or I can connect a community of people that like the Rolling Stones, our Major League Baseball, our basketball. And that is really powerful, as you know. And we see this world of both, the internet makes the world both more balkanized, but also, you know, bigger. You don't need just your little neighborhood. You can find your people all over the place.
So just curious, when you talk about the global aspects of the crypto movement, kind of moving more to the regulatory side of things, where the US is maybe ramping up, you have China making moves to kind of ban it, you have the mining issue with the tensions going on between Russia, well, in Kazakhstan, I should say. I mean, how do you manage all of this macro stuff when you're looking at a crypto play?
Yeah, listen, so China was interesting because they broadly said, we want to run an authoritarian, totalitarian government, and we want our version of a centralized blockchain to be the one everyone has to use, so we know exactly what you're doing. And so I'm kind of happy that we have such a clear model of what I don't want, of what America doesn't want, right? Centralized blockchain. So even when we talk about central bank issued digital currencies, it's way too centralized. It would be a disaster, quite frankly, right? I don't want the Federal Reserve knowing what I buy late night at the deli. I just don't.
What do you buy late?
I'm not telling anybody what I buy late night at the deli. And so, you know, in lots of ways, China was a blessing. And the crypto community proved it didn't need it, right? Mining hash rates already high. It was amazing how fast that mining equipment moved out of China and found its way into other parts of the world. Listen, it would be terrible if every country decided to become an authoritarian, you know, dictatorship. It really would. I don't think that's going to happen. And so for the rest of the world, figuring out how to ride this tension between people's desire for privacy and the efficiencies of blockchains is where regulators are trying to come down. And I think in the US, we're going to get to the right answer. Listen, there's always politics involved. Gary Gensler is the head of the SEC. He's a very ambitious guy, and he wants to regulate crypto, and he's smart. He doesn't necessarily have the authority to regulate crypto. And so there's this tension between CFTC and SEC, and now there's rumors that Biden's going to issue an executive order, which would seem insane. There's nothing systemically dangerous about crypto. It's a closed system, right? And so we've seen crypto wealth go from $3 trillion to under $2 trillion in the last 6 weeks. And so it sucks if you were part of that crypto wealth, but there's no systemic impact on the rest of the country. And so we'll see how it plays out. I would tell you that our community is so much more engaged in DC in the last 6 months than they were in the previous 4 years. And so the education level of people in the House and in the Senate and people in the regulatory agencies is on a straight line up, which is a good thing.
Yeah, definitely after you see some of the hearings on the social media side, when you saw some of our legislators there, good to see some improvement. Just curious, when you're hiring, I know that you've pulled people from the traditional financial industry into your firm. You've been on a huge hiring ramp. What's that mix that you're looking for? Where's the talent you're seeing?
Yeah, listen, we certainly want some people that understand how institutions function. And so we're not all 22-year-olds. But we also want and hire people from Twitter. People that have dove in and really understand crypto and how it works and how it's changing. And so it's this blend between, real crypto degens, as they're called, guys that really live, breathe 24 hours a day, this new world, and institutional people who have the intellectual curiosity to try to learn. And, I have a whip. And I kind of whipped my old guys. I was like, buy an NFT. Until you buy your own NFT and set up a goddamn MetaMask wallet, you really don't understand how the system works. And so, but that's the mix we're trying for.
Someone who knows nothing about the space, aside from maybe just, the headlines that they've read over the last few years, where do you recommend they start, whether it's reading, watching? What's your crypto media diet?
Well, listen, I think I always tell people, set up a wallet and buy $100 worth of Bitcoin and send it to a friend. Just understanding how the system works is pretty amazing. You're like, wait, I just did that? And it doesn't cost anything? Matter of fact, I could send someone out there $100,000 and it would cost 12 cents. Or $4 million would cost 12 cents. And it would happen like that. You're like, that's...
Do I need to give you my number?
That's
what
really
are we doing?
Yeah. Right now it might be $10. And so same thing with NFT. So partly just use it a little bit. If you want to follow crypto, you have to be on Twitter. Crypto lives on Twitter. And so it's pretty easy to figure out the 10, 20, 30, 40, 50 influencers. There's an amazing amount of knowledge that firms like ours put out, right? We have a big research business. At one point we did a thing called Alexandria, which was like the library of all crypto. And so our firm, glad to send you all kinds of reading, but there's also a ton on YouTube. Like, watch Vitalik Buterin. He's like the boy genius of crypto, and he's very, very articulate about how this thing is playing out. And so plenty of sources to come up to speed. I don't think everyone has to become a crypto expert as well. I think many investors lean on other people's expertise. And many, like the doctor guy says, what should I do? I said, well, my basic advice to people is buy some Bitcoin and either buy some of our stock or put money in funds, right? We've got a big asset management business now. We've got a fund-to-fund business that's got venture. We've got a fund-to-fund that's got market neutral. Lots of different, we've got a fund that's focused on the interactive space or the metaverse. And so those venture funds have tended to be good places to put your money because you're not looking every single day at the price of Bitcoin or the price of some altcoin that your friend told you to buy that looked really good for a week and then collapses and you're like, what the hell happened? And so the real crypto shuffle is a full-time game for people, and you can make lots of money and lose lots of money, but it's not recommended to be a part-time altcoin buyer. It just isn't, because it looks really good and then it collapses and you're like, what the heck happened? And so my strong advice to most people is, trust the professionals and stay simple.
So putting it in your portfolio, what purpose is it serving? Is it growth? Is it speculative?
Well, listen, I think there are two different purposes. Bitcoin, I think, literally is a digital gold, and it's a hedge against the debasement of fiat currency. There is a chance that Janet Yellen and Jerome Powell will be two of the greatest financial leaders of our time, and they will take this economy with 130% debt to GDP and 6% inflation and get inflation to come down where we think it's 2%, but it's actually 4%, and slowly inflate our debt away and have the deficit fall because growth is so strong and all is going to be good. But it's a hard plane to land. They were dealt a shitty, they helped create it, but right now, I would never want to be in that seat. It's a horrible seat to try to figure out how to get, no country comes back from 130% of debt to GDP, very few, right? And so with all likelihood, we will have to inflate away our debt. And if you think what that means, it means the purchasing power of the dollar gets weaker every year. And holding a hard asset, so real estate, I still love real estate, right? Real estate's a hard asset. Gold, hard asset. Bitcoin has become a generational hard asset. Mm-hmm. And even though it's had this big volatility, it's still young, it's 13 years old. There are only 21 million Bitcoin. There'll never be any more. There is a growing and growing belief system that it's a hard asset. And all value is, all hard assets are, is a belief system, right? It's a social construct. Like what made gold a hard asset? 3,000 years of people believing it is one. That process has happened at Bitcoin at lightning speed. But there are enough people around the world, right? There's over 140 million holders of Bitcoin that believe it, that it's not going away. And so I think Bitcoin is its own story. The rest of the story is a technology play, and it's a fascinating one. And it's happening at lightning speed as well. And so you have to have exposure to the next internet, right? It's the internet of value exchange. And so you're crazy not to have exposure to it. It's almost like being in 1994 and say, yeah, I'm not going to do that internet thing, right? Like, right. You got to be in it.
Well, I don't know if you saw that interview on MTV decades ago, David Bowie talking about the new internet, and it was basically him kind of talking about like the relationship between the creator and the end user. I mean, he basically predicted what we're seeing in digital assets now. Is there anything else like that that excites you about this new internet?
Yeah, listen, there are, I'm going to tell a funny story of, there was this social influencer, young Singaporean, very cute, who would put pictures up on Instagram and Twitter, and her following, like most, Instagram models or Instagram influencers, grew because she was cute and cheeky. And unlike most Instagram users who, work their tail off to create an audience and maybe make $70,000 a year, $75,000 a year, unless you're Kim Kardashian or Paris Hilton, that whole world of Instagram models don't really make money, and they hustle their tail off to create their community. She issued a series of NFTs of stickers with funny crypto sayings on them, and cute pictures of her, and used this community she created, and all of a sudden it's a $15 million ecosystem. And I was like, and it wasn't just her, she's got a partner, and they created a business, and they're creating a platform for social media, so you can create your own community and have people buy in, and people are willing to pay for that access. Wow. What that access gets you, I've got to do a little more reading, but it's often just the association. And so here's someone who monetized their community using this new technology just last week, and it became a huge little sensation. And now, the one thing to know about NFTs or any of these projects is their sustainability only happens if more energy gets poured in. Mm-hmm. And so you can't be an artist that says, I'm going to do a piece of NFT art and put it out there and hope it's going to just sustain. Some guy will buy it and then it'll drift to zero. So the communities have to have the energy injected into them. And so this is about community building. And it's the same thing with the crypto ecosystems. And it's why you see such kind of teams, almost like a sports team mania around the Luna ecosystem or Solana, or because you're trying to create energy. Now, those only will work if the end product is good, right? But you're getting that sustainability by pulling in energy.
How do you value that? I mean, when you would do like a normal stock valuation, how do you value a community?
How do we value Tesla, right? There's a memic value of Tesla, and there's a discounted cash flow. And it's one of the hardest things. It's why, quite frankly, people say, why did crypto sell off if you're seeing all this adoption? I was like, because who knows what the right value should have been, right? In general, value equity, growth stocks will go up if the second derivative of growth is positive. And that's lasted for a long time. But we've got a new variable, which is less liquidity. And so we're going to have a one-off, I think, revaluation of lots of stuff, and then that paradigm will happen again. Mm-hmm. The good stuff will end up going up. Again, I use Tesla because everybody knows Tesla, and we all think it's a decent company. Like, where should equilibrium be? There really is never an equilibrium, right? Mm-hmm. And that's what makes this tricky.
So something you said earlier, you were talking about how there's this generation that has never really been through a bear market. Kind of related, we're going to see the Fed presumably raise rates as many as 3-4 times this year. We really haven't seen like a real rate hiking cycle. I mean, we tried in 2015, but had to kind of halt that. We have a generation of traders that have never really. I mean, the last time the market freaked out when we were at 2%. I mean, we've had a generation of traders that's never seen.
Yeah, I started at Goldman Sachs April 1st of 1989, and 10 years were, anyone guess? 9%. That's how old I am. Yeah, we haven't. So listen, if there was one piece of data every one of us should give a quarter of our net worth for, it would be, where's inflation in 2 years, or in 18 months, or even in 12 months? There's mixed feelings, right? We know it's going to come down some on base effects. We know we had the Great Resignation. People didn't want to work for $8 an hour or $12 an hour or $15 an hour. And so we're having labor inflation for the first time, which is probably a good thing socially. Is that a one-off and then it stops again, or does it keep going? We know we've got a supply side shock. And so there's been unbelievable inflation in food and in lumber and all kinds of used cars because there's no supply. That tends to be transitory. And so when you put it all together, inflation's a funny thing because it's also always about inflation expectations, which are creeping up. And so your Chairman Powell's job is to make sure inflation doesn't get out of control. The German or ECB governors used to always talk about inflation expectations, literally like it was their only, it is their only mission in life, right? The entire mandate of the ECB is to make sure inflation expectations stay anchored. And so that's the number we need to know. Mm-hmm. And if we knew that, investing would be easy, right? If a year from now, inflation was back to 2%, you're supposed to be buying lots of stuff because we're going to have 2% is really loose monetary policy given the amount that's in there, right? We're still putting more, even now we're putting more money in the system, not taking it out. So there's no tightening yet. It's just the perceived tightening coming that's creating this shift of valuation. once there's an equilibrium of where that's going to stop, markets will go right back up.
And then we only have time for one more question. We could go on and on and on, but okay, next 12 months, what are you most excited for in cryptos? What would you like to see, or what do you think is happening?
Listen, I think this is going to be a great 12 months to build. And I think you're going to see much better user interface and user experience with the whole space, from DeFi to NFTs to the wallets you use. Crypto is still clunky, right? It's the blockchains are fast, not fast enough. They break down. Like, it's hard to like think about this, but Ethereum is only like, whatever, 2015, 6 years old, 7 years old. Like, these are, the whole crypto thing really didn't take off till about 3 years ago. And so it's a really, really young space. And I think, you know, what I'm telling my own company to do is build relationships, build product, build systems with 100% certainty this thing's not going away. And so it's a little bit less of the speculative casino that it's been, and more of getting to the work of kind of, you know, building the revolution. And I think you're going to see a year from now, I don't know where prices will be. I actually think prices could be higher, because I think we've already taken a pretty big beat down. And I know money's coming in. I've traveled this country, I've traveled to the Mideast, I've traveled to Europe, and institutions are lining up and getting ready. And so, and I see all the money in venture. And so I don't want to come across as wildly pessimistic on crypto. I'm actually more, like I said, sober that investing is going to be more difficult this year than it was last year. Equities are going to have a harder time, and you're going to see lots of rotation. But for us, it's build. All
right, that's unfortunately all we have time for now, but thank you so much, Mike.
Thanks, guys.